You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello. Welcome back to the Infinite Banking Mastery Podcast. Hope y'all had a great week. Should I have different policies for different uses? This is a question that comes up from time to time, so I thought I would do a podcast on it. There can be some confusion around how many policies should be started or how many should be acquired. I would say that when you are ready to apply, that you shouldn't worry about acquiring different policies for different purposes. Because sometimes people just think, I want to use this one for loaning for this reason, and this one's for my business, and this one's for this. Now, there's certainly nothing wrong with that, but it's not necessary. You don't need to do that. I would say to begin with what you can. And I've often given the advice that if you have a range, you're saying, I can do between this amount and this amount. I would suggest starting at the higher end of your budget because you can easily drop the premium down. You don't have to stay at the same amount that you start with. You can easily drop off the paid-up additions in any year that you're having a difficulty, or you can fund any amount of the paid-up additions from zero to what you started with. But you cannot increase the premium. A lot of times people say, I'm going to start at this and next year I can add extra money. I'm going to have this bonus come in, tax return come in, I'm getting a raise. And so I expect I'll be able to fund higher next year. And they think that they can add that to policy number one that you began right now. So when we're starting a policy, we are starting at the ceiling, the MEC ceiling. And so you cannot easily add funds over and above what you start with. Now, the company contract that you start with may allow you to add more money. So let's say you started with a paid-up additions amount of $10,000 a year. They may allow you to fund even up to $20,000 a year, but that doesn't mean that you should or that you can without MECing your contract, which again means to make the contract become taxable, which we do not want to do. We do not want the contract to become taxable. So even though the company may allow it, doesn't mean you should do it. I know I've said this before. I've had clients give me a call, say, hey, I called the company. I went ahead and sent in my paid-up additions and I sent in some extra. Or even sometimes I'm just reviewing the account at some future date and I look back and see that they called the company and they funded more money than what our initial plan was because the company will allow it. But then we have to go through and do all sorts of checking in with the company to make sure that contract is not going to MEC now that they've done that. Because adding extra funds, extra paid-up additions, will most likely cause your contract to MEC, even if it didn't do so right away, even if it didn't do so this year. As a reminder, companies do say that they will send out a letter if you do MEC your contract and say, hey, did you mean to do that? We can back those funds out. But usually there's a time limit on that letter. And if you don't see it or you don't open your mail right away and you don't catch it, then it's going to become a MEC and there's nothing you can do about it. And I know a lot of you get lots of mail, especially once you start with policies or you have more than one. You start getting this mail in, you're like, that's probably a bill or that's probably something, and you ignore it. But if you end up MECing the contract, that's how you're going to be notified. So because we have to be very careful adding funds in, and because we don't want the contract to MEC, but you might want to increase your premium, I just say start at the top of your budget because you can always drop it down if even the next year you say, I can't do the same level that I wanted to. And then if you end up skipping a year or two of your paid-up additions, then maybe we can overfund if the company allows in a future year. But I would still want to check to make sure it's not going to MEC before doing so. Starting at the higher end of your budget will also build your pool of cash more quickly, which is usually everyone's goal. They already have a plan or thoughts of what they would like to use the funds for. Although some people will say, let me test the waters first with a smaller premium amount. Let me see how it goes and try it out before I decide to fund at the level I really think that I can do or that I really intend to. And so they'll want to start off with something small to test out the system and see how it's all going to work. And I would say if you're holding your funding back until you try this whole process out, thinking that you're going to expand at some point in the future, I would say that you're losing your most valuable asset, which is time. Frankly, your account is not going to do anything astounding in the beginning, even less so if your funding is minimal. You're going to have less cash, less available cash to finance the things you want to purchase. You will have less cash in your future, less for your retirement years, because you will have missed out on all those years of that extra premium going in, compounding and earning dividends. You'll have missed out on all those extra years, which in the beginning, it doesn't seem like a lot. You're thinking, oh, that's just 3 years. I'm waiting only 3 to 5 years or whatever until you really begin funding. But actually, it's at the end when you really realize what those first few years that you waited, what it really did to your system, because those few years with that extra premium going in and then compounding for many years actually makes a big difference in the end. Trying it out just with the minimal premium in the beginning is not going to be something that's like, wow, that's amazing. It's not like the stock market. It's not going to swing around or be something great in the beginning years. It actually just gets more and more awesome over time. It's just a holding tank that's going to be way more safe, way more awesome, and do way more for you than your bank savings account. And if you do all the actions of becoming your own banker well, it will be a more powerful tool than you could have ever imagined. So you definitely don't want to wait a bunch of years to fund how or what you can from the beginning. Just start with what you can on the higher end of your budget. You could start off covering yourself, a spouse, your children with the same premium dollars that you plan to begin with. Maybe you have a maximum of 10, 20, 30,000 or more, 50,000, whatever it is. You can start off with a plan. I have this much and I want to cover these people. Or if you're adamant or really just desire having the bulk of the cash in one account and maybe on your own life, then we can start off that way as well. Although if you're married, I definitely do think it's important to have coverage on your spouse, whether or not that person is a homemaker. And so you could always start off with just a term policy on your spouse. You could have a child rider on the children if you don't want to put policies on them yet. That will give them the opportunity in the future to begin their own whole life policies with no health underwriting, no matter what happens in their lifetime, because sometimes children become uninsurable before they reach adulthood. I've seen it happen before. And so I would say if you lock in that term rider at the very least, then they will have that opportunity later. And of course, it protects against tragedies we don't even want to think of for your children. Although, again, I have lost two children of people that are very close to me. And so it does happen. We don't want to think about it. And so we focus instead on the opportunity and the benefit of them being able to start their own policies when they're older with no underwriting. And if you do end up starting off with a term policy on your spouse because you're focusing the bulk of the cash on yourself, just keep in mind that we can always convert that term into a whole life or more than one whole life, because you don't have to convert the whole amount of term insurance at once. And then you can start banking system number 2 at that time. If you decide instead, I'd like to start with a whole life policy on each member of my family, of course, that's great too, because now everyone has a policy that's going to grow in cash and value at the earliest possible time, so they have time on their side for their accounts to build. If you start off on a policy or having a policy for each of you, you can easily assign or designate each policy for different reasons. Maybe if you have a policy on your child or your children, then those policies are meant for their college funds or their first car, braces, whatever they may need, and you can use it for more than one purpose, of course. So it's easy to allocate for things like that when you do have more than one policy for more than one person. And I do think that's a great idea, especially for your children, to keep those funds separate. And the cool thing is, if you have those funds designated for your children to go to college and they end up going to trade school or some other thing, not going to college, now they have a bulk of funds to help them, give them a step up in their life, or maybe buying their first house, or for some other important reason that they could use the funds for. And they can access those funds with no penalty, unlike a 529 college plan. If you have a policy for both you and your spouse, you can designate those policies differently for different needs, or you can borrow against both for the same reason, the same large purchase or investment. From there, as you grow your system and layer on more policies, you can designate them for different reasons, different uses, or again, you can combine and borrow against all of them for the same purpose. It's up to you. Certainly, designating different policies for different things can be more clean for your accounting, but also you may want to do something where you need funds from each policy. So it's really up to you. You don't need one policy for this, one policy for that, but for the accounting, it will help make it more clear. Another thing I'd like to point out as well is when you take a loan from your policy and then you take a second loan from the same policy, it's not going to be like you have these two separate loans. It's just one ongoing balance. And so it's increasing and decreasing depending on how much you've borrowed and how much you're paying back. It's just one loan and your available cash is growing all the time because you're making premium payments, and that's growing the amount of cash you have available to you to borrow. So then if you have different loans for different things and you have different amortization schedules, that's going to be something you need to keep track of. You need to keep notes on that, and we can certainly help you put these amortization schedules together so you have that paperwork or those PDFs you can save, but you're going to need to keep track of those yourself because the company will just lump those payments together. If you're sending in $500 a month for this payment and $600 a month for your other loan that you took, it's going to be an $1,100 to the company, and you're going to need to keep track of that accounting separately yourself. So that's all I have for you today. I hope that brought some clarification to that question and was helpful to you in some way. If you're ready to begin your system, reach out to me. I'm happy to help you and partner with you. Valerie at alphaomegawealth.com. I hope you have a great week. Thank you for listening.
This is thepodcastfactory.com.